Hello guys, this is Felipe from the Noob Trader, and on today's video what we're simply going to be doing is looking forward or looking ahead towards the Fed press conference, which will be happening uh, tomorrow, I believe at 7:30 New York time, if I'm not mistaken. This is kind of the big economic event for, frankly, this month, that everybody's been really looking kind of forward to, especially after we had the CPI data come out at the end of last week. We'll cover quickly, what the results of that were. We just also had the PPI data come out this week, which is another measure, of course, of inflation. And as as a result of the PPI that just came out, we're actually seeing a slight downturn in the gold market here. 1772 right now we're trading at. So kind of want to talk about, what simply like what can we kind of potentially expect for tomorrow? Just given what we've been seeing in the market so far and the data that's been coming out and what this could potentially mean for the gold market. Okay. Sorry for talking a little quietly, but my voice is still a bit messed up from being sick, but just wanted to do this video. This is a really big event, and I hope you guys will find it useful. So if we go to investing.com and we look at the economic calendar, and we actually look at the data that we got from it was Friday, I believe, that we actually got for the CPI, right? The CPI just basically hit directly on the forecast. As a result, what we saw last Friday is some slight movement to the upside, but I think hitting the forecast right on the money just really, if anything, kind of reinforced the fact that, of course, as now everybody knows, although this has been the case for months, but nobody wanted, I guess, seemingly believe it, that inflation is a huge problem right now in the United States, right? The fact that we hit the forecast, yeah, we didn't go over, so it didn't cause that crazy potential upswing in the gold market, but um, you know, everything is still reinforced. If we look at the data, CPI year on year 6.8%. That's absolutely ridiculous. Core CPI year on year 4.9%. Um, we're just experiencing insane amounts of inflation. But as I mentioned in the last video about this that I did, kind of looking ahead towards the CPI data release, the Fed has been kind of changing their tune, saying that now they're starting to take this inflation essentially more seriously. And so that's getting people a little bit spooked, um, whether that's just, analysts or investors or even just random people commenting on forums. It's getting people quite spooked about the fact that the Fed is actually going to do something, i.e. raise interest rates really, really soon or in a hasty fashion as a result of this, obscenely high inflation that we're seeing. And certainly what we are seeing today as a result of the PPI data that came out. So if I think I scroll down here, yeah, we see the PPI here, which is analyzing more the producer side, okay, inflation, but still, very, very key indicator of how inflation is in the market. The PPI actually hit above forecasts, okay, like quite significantly in a lot of different in a lot of different ways, whether it's the core PPI or just the overall PPI. We're almost looking at 10% right now, right? So this data just reinforced the fact that inflation is here, it's high, and it's actually getting worse. It's not improving. The inflation is not transitory. And now that we have these two data points out, everybody's looking at with high anticipation towards what Powell is going to say tomorrow in his press conference as he releases, as the FOMC are going to meet, right? Just to give you the exact time for this particular event, it is going to be at, let's see here. Yeah, it's going to be at, I think it's 7:30 US time. There's going to be the interest rate decision. Don't worry. There, I mean, unless something absolutely crazy happens, yeah, this interest rate is still going to stay the same. Okay, so that's not what people are paying attention towards, but what people rather are looking for is what Powell is going to say in regards to this inflation now. What is he going to say? Is he going to all of a sudden um, talk about raising interest rates even sooner than he was already saying, which was, I think, like within 6 months or within like kind of Q2, Q3 now of 2022? Is he saying, okay, now we're going to just start raising them in February or something like that? And could that potentially then just cause the market to go all chaotic? That's what a lot of people are fearing. If you even look at crypto forums and stuff, people who are just trading Bitcoin and Ethereum, the people are really freaking out about the fact that, if Powell decides to raise interest rates really, really quickly, that it's just going to cause the crypto market to crash, right? And as we all know, crypto market, yeah, it's had a pretty significant pullback recently, but it's at, trading at pretty high valuations. If we look at the stock market right now, yeah, there's a bit of a pullback, especially with the anticipation coming with the Powell press conference, with the PPI data that just came out. We have a slight pullback, but when you zoom out a bit, we're still at, pretty much all-time highs, right? So I think people are getting really concerned. But one thing I just want to reiterate here on on this video is that, as people who have really studied what Powell does, his moves, have analyzed the market for quite some time now in terms from a fundamental standpoint, we all know that this is not Powell's style. Powell does not um, make super hasty decisions, right? If anything, he tends to be extremely slow with his monetary policy, especially when considering the state of the stock market and all those different things and just the overall US economy in general, right? He has to take care of the overall US economy. And he is not somebody or a person who's going to just all of a sudden make a hasty decision to raise interest rates when, look, the jobs data is still bad, right? The economy is still suffering. Now we have the Omicron variant, right? The US economy is just, it's not recovering nearly as nicely in a nice fashion as Powell probably is wanting or would have wanted, let's say at the beginning of 2021, right? We're still suffering from COVID issues. The global economy is still suffering from supply side shortages, right? Then on top of that, the crazy monetary policy has also been causing ridiculous amounts of inflation now in the country, right? Powell will not, I still strongly stand by this. Powell will not do something or say something or implement some sort of policy that's going to cause a pretty strong correction, for example, in the stock market or other types of markets right now. I don't think that that would behoove him, right? He needs to make sure that the economic recovery is stable, right? And that the US economy actually does recover during these really, really weird times. He doesn't want to just cause even more chaos by, all of a sudden raising interest rates, okay? And especially raising interest rates drastically. So ultimately, do I think he's going to address raising interest rates tomorrow? I mean, it's going to be brought up 100%. But at least from everything that we've also seen him, the way that he's been addressing interest rates, over the last couple of months, I can't actually personally believe that he's going to start talking about, you know, raising interest rates super drastically. And let's say within the next, like let's say January of 2022, or just push that timeline for raising interest rates even closer, um, and potentially cause a shock in the market. I don't think he will do that. What we have seen from him is that he is very meticulous at laying out a very slow and a very steady pullback in terms of his monetary policy, right? The buy the reality is still this. We're still the U.S. government is still purchasing um, a shit ton of bonds back, right, from or a shit ton of assets back from banks, right, to continue pumping the economy with money. The Fed is still we still have 0.25% interest rate. That's the Fed's interest rate right now, right? And the reality is he's not just going to all of a sudden pump it to like 3%. I think people need to be a little more realistic about how Powell operates, right? So he's going to first lay out a very, very clear schedule, and that raise up is going to be very slow, in my opinion. He won't do something crazy, okay? And he's going to give the market a lot of time to digest this interest rate hike. Okay, so ultimately, I think he's going to reinforce that tomorrow. Okay, he's going to reinforce this fact. I think he's going to reinforce the fact that the economy is still struggling, and he can't do that so quickly despite the inflation data. Okay, so um, with that being said, I really think that um, people shouldn't panic in terms of what Powell may say tomorrow. And that anything he does say, yes, it could lead to a downturn in the market, but I'm still quite bullish on the idea that gold at 1750 at these price points of where we're at now and below is of good value. Because once the market actually digests the fact that interest rates could raise, right, but in a slow and very meticulous fashion, the market is still going to finally realize a couple things. Inflation's high, monetary policy is not good for the dollar right now, and ultimately things are going to still be able to continue. The market doesn't need to totally freak out. So I think let's see what happens, but that's kind of where I feel like things are headed. Of course, anything can happen. He could do a complete 180 and, gold could really pull back quite strongly. And then I think we'll have to reevaluate everything. But the reality is that as of right now, I don't really see that happening. And consequently, if we get a strong dip in the gold price from 1750 and below, that could be a really interesting time to get a position in gold as a longer term gold bull. Okay. Also, just from a technical standpoint, the gold market, I know we're seeing a bit of a downtrend here, but everything's still looking relatively okay. I mean, we're not even close to this last relative low. Okay, if anything, right now we're just kind of at the moment from a technical standpoint, we're kind of, it looks like we may potentially be able to set a higher low here. Also, when we're looking though, however, on the weekly chart, we're kind of seeing the same thing where we really do have this kind of steady upward trend here in price of higher lows. Okay, while of course we're also having this kind of lower highs thing going on. So we're forming this wedge, and the market's really kind of looking for something to then stimulate the next way to go, forward or back, right? So I think a lot's riding on this, but from a purely fundamental standpoint, I don't think there's any reason to fear, okay? Anyways, guys, that's it for today. If you have any questions, please leave a comment, give it a like. See you in the next video.